Hi, everybody. I'm Jeff Barton, and this is the Mortgage Minute. Thanks very much for tuning in, for watching what we're doing here on Facebook and LinkedIn. And we're coming to you from Portland, Oregon today, where I am on the road visiting relatives. Got the COVID shots and figured I'd take a drive up the coast of California to Oregon and Seattle to see my sons. Interesting note. Most places I visit are still in very much lockdown in all three states. Nothing is open. The only things that are open are takeout, and everybody is wearing a mask. This is pretty much from when I started in Southern California all the way up to almost past Seattle. So if you're out there and you're thinking everything is different other places, at least here on the West Coast, it's not. And there is no real protest against it, which is a good thing. We look to have the vaccine pretty much given out probably by the end of June and July in many places. I do know that it's opened up the availability for people to get vaccines, so that's a good thing. And how does that affect housing, and how does it affect your mortgage interest rate? I'm not quite sure, but I can tell you honestly that opening up the economy is really going to help those who do not have a way by which they can pay their rent. Moratorium on the rent has been extended by the Biden administration through June, which I think is a good thing. They're kicking that can down the road. I don't know what's going to happen with the landlords that have to pay, servicers that have to pay on those particular loans that are outstanding on those properties. That is a wait to be determined type of thing. There was no real relief in the $1.9 trillion package for servicers. I don't think that's quite fair, but at the same time, that is currently how it is. Let's get right to the refi rates and see what they are. Refi rates or purchase rates, depending on. And by the way, rates have gone up, as everyone knows. Rates are continuing to go up as yields are continuing to go up, while the cost of treasuries and mortgage-backed securities goes down. There's a lot of momentum behind trying to get dollars out of treasuries and into other investments, which might yield more, especially since the economy is picking up. Anyway, 30-year fixed, 3.37. 15 is at 2.82. 2.85 for the FHA, 3.33 for jumbo, and 2.75 for the 5/1 The 10-year, as I said, yield is 1.72. Now, this is an amazing thing. We have gone from pre-pandemic, which was a little bit different than what it is today, down to 0.53 or a half a point yield. That's when everyone was flight to securities. So that meant that the yield could actually fall by a tremendous amount, saving the Treasury a ton of dough. Now that the competition for those dollars has really increased, we see the yield from the Treasury having to go up. Now, is that a good thing? No, because it means that mortgage interest rates have gone up. I've just described to you what mortgage interest rates was. And two and a half months ago, you saw the 30-year at about 2.75. So you can see it's gone up almost a half a point to 0.6%. And that really means that in the refi market, let's just talk refi market here, you have about 10 million people who can take advantage still of this particular interest rate. Now, that may seem like a lot, but it was 18 million as little as 2.5 months ago. And 18 million people, that means 7 million people lost out on what they call the golden hour, or the ability for you to go out and get a mortgage and save yourself some money. That's not a good thing. If you're out there and you're thinking, what was I thinking? You're right. But for those 10 million people, you better get on it. If you're thinking of doing a refi, now is the time, because we're going to see rates continue to rise as this climate of improving economy and COVID shots continues to increase. There are a number of other things happening. The refi candidates, I talked about that a bit. Home prices, 11.2% increase from January of 2020. That's an amazing thing. Now, there are 3 cities that those numbers are even dwarfed. In San Diego, for instance, 15% from last year at this time, prices have increased. 15%. Seattle's another city that's gone up about 12.5%. So you can see in some pockets of the country, rising home prices has really catapulted those economies and those particular problems that people are trying to get a home and can't get a home, and that's the reason why. It's because you have rising interest rates and rising real estate prices and low inventory. All of those things spell disaster for anybody trying to get a house, which means that flight from a lot of the major cities to suburbs has happened, even beyond suburbs to other smaller cities. Now, those cities, in turn, their real estate prices have gone up because the demand on their housing has also gone up. So it's a cascading effect. We need more housing. I'm Jeff Barton, your voice in the mortgage business for the Mortgage Minute. We'll be right back.